most of big tech earnings we know are in the rear view mirror now. Tariffs remain a dark cloud of uncertainty for the sector as the threat of renewed volatility lingers. We're taking a look at the state of tech with Baird Managing Director. That would be Ted Mortensen. Ted, good to see you.
Good to see you.
So maybe start, Ted, big picture when it comes to tech. I'm just curious how you would judge, Ted, how you would characterize sentiment toward the sector right now. How would you describe it?
Yeah, that's a great question. Sentiment is pretty negative, actually. If you look at some of the portfolios that have been structured, they're very defensive. So if you look at what happened, I would say first week of February, we had a lot of complacency and the market was at its all-time highs. Then we really pivoted down to a down cycle. We're almost down 22%. Between that February and April timeframe, people got very defensive. And in my career, I've never seen underweights the size as I've seen in tech going into, I would say April 7th was the lows. You've seen a snapback of roughly 15%. And I think that's just people trying to get equal weight on certain sectors that they can see growth on that's sustainable.
It's so interesting, Ted, because before that dip, there was a lot of talk that tech was the new defensive in some ways, or that it had defensive characteristics because of its size, because of the long-term AI growth story. And it doesn't seem like those sort of underlying beliefs have necessarily gone away, or have they?
They haven't. I think one of the biggest reports of the whole earnings season was Microsoft, okay? They killed it. They killed it on Azure on 35% growth, and half of that growth was just people moving to the cloud. They can't even maintain Gen AI supply-demand curves. Same thing with Amazon. They can't meet the Gen AI demand. So these companies, if you look at Meta, Microsoft specifically, they're free cash flowing better than Argentina, quite frankly. They're putting free cash flow out there in the $18 billion range, and that gives them a lot of latitude that they can spend like they're spending on Gen AI. I would argue they are somewhat defensive if you look at where the market's going.
One question, Ted, heading into this earnings season was the AI boom and whether those big tech companies were going to keep spending on that boom. And then when you heard them talk about their capex plans, though, was Alphabet reiterated and Microsoft reiterated and Meta raised. And I guess the question is, do you think, though, this is peak capex? I mean, if I'm an NVIDIA investor right now, I'm wondering about what comes in 2026.
So Wall Street got it wrong, to be honest with you, and I think there was a lot of misinformation from some of the REIT analysts that
those reports were coming hot and fast. I know.
Yeah, and I think it was just it's really kind of a sucker punch where the REIT analysts were saying, "Oh, I'm seeing Microsoft and Amazon pull back on capex." The real issue is time to power. You cannot get some of these data centers that are being built the represent power that you need for the cloud titans. So that's number one. Microsoft has been so adamant that capex will moderate because they've built all these long-term assets, the shells and the utilities, right? So if you look at 25 and 26, they have to populate all these mega data centers with next generation equipment. So that's where we're focused. We're really focused on the picks and shovels versus the construction side of the business.
And who's picks and shovels, Ted?
Oh, like if you look at everything from the supply on core silicon, that's NVIDIA and Avago primarily. And then you go up the stack on networking, that's Arista, and even a name like Celestica that is doing the private label white box networking. And then you go to some of the high voltage power players like Monolithic Power or whatever. That whole continuum of build, there's companies that you should be focused on that are going to have some pretty good growth over the next couple of years.
And then, Ted, we got to ask you about one of the big stories of the week was the sort of Apple testimony that came out, right? That talked about AI and the role it's playing in search.
Yeah.
And we saw Alphabet shares get really spooked here because I guess part of the leap was not only Apple leading more into AI, but also the idea that maybe people aren't using Google as much. Maybe they're just going straight to Perplexity or ChatGPT or whatever to do their searching. How much do you think, where are we on that sort of adoption curve?
Well, Google has 100% of search, so yeah, obviously they can't maintain that amount. I think it's interesting that Apple put out a press release when they are so far behind on Gen AI. I mean, they're a year behind on Siri. If you look at Google, the way I look at it is a little bit different. You look at Google, they pioneered Gen AI through DeepMind and some other bets. That's number one. Number two, they've been spending at billion-dollar levels on cloud infrastructure. Apple has not. So I think it's throwing a rock in a glass house a little bit. And I think it's an overreaction personally. My clients are worried about Google's share count, but it's a brilliant company with unbelievably good technology. So there's other pieces of Google you should look at.